While a proven trading strategy and sound risk and money management systems are important, psychology is what glues everything together. And without the right mindset, trading will become difficult, confusing, and challenging. In this video, I will share 10 winning mindset, the kind of information I wish I had when I first started trading. First, trade your set of rules, not your impulses. Impulses trading is the common psychologist mistakes that all traders struggle with, and more often than not, those impulses traders turn out to be losers. This isn't surprising, though, when you consider that an impulses decisions is one without a plan. Not having a plan is perhaps the biggest factors which leads to impulses trading. The reality is that it isn't so easy to get caught up in the market's moment. Instead of seeing the potential risk of not following your rules, you only see opportunities passing you by, and that's a dangerous way to view the market. The solution is to plan your trade so you can trade your plan. By planning your trade in advance, you are setting the ground rules as well as your limits. If you know what you're looking for and how you plan to act, if the market does what you anticipate, you will be able to be objective and stand aside from the fear greed cycle. Second, winning in the markets is a function of habits. Unfortunately, so is losing. Making money trading is simply a matter of representing the same effects steps time after time. It's all about keeping those habits, but the opposite is true. Is you have a bad habit. Every trade has his own bad habits that may be holding him back from trading success. An example of bad trading habits is failing to manage your trading risks, or revenge trading after taking a loss, or jumping from one system to another, or sticking to your trading plan when it's providing a failure, or getting emotional and impatient. This is something you have to figure out for yourself. To find your bad habits, your own weaknesses, and replace them with good habits. Remember, even if you cannot control the market, you can control your own behavior. Good trading habits includes keeping a balanced schedule and lifestyle, being disciplined, avoiding big risk, keeping a journal, and many more. Successful people, not just traders, don't attack success by luck alone. They have consistently adopted some good habits that helped them to become successful. Third, trade often to minimize the impact of any single losing trade and to build skills. Training may seem simple on the surface, but isn't hard to implement your knowledge in live market conditions. Every day, every trend, every pullback is different. Nothing looks exactly the same as it did in the textbook examples. So, to providence at implementing a method, you need to practice a lot, like the sports. When you do drills to create muscle memory in the trading, you need to trade often to build a skill and really free your strategy. And you need to trade small from the proper psychological standardship. It is essential to maximize the potential impact that losing trade may have on your account balance. If you lose big on a signal trade, it will affect you. But if you limit the amount of capital you risk a signal trade, it won't hurt at all. You can pick yourself up easily and move to the next trade. It's much easier to take a loss when the real impact on your account is minimal. 4. Keep your size small to reduce the risk of ruin the reduce emotional involvement and to give you the chance to learn from your mistakes without major consequences. The risk of ruin the probability that you will lose so much money you cannot longer continue trading. If you have capital, you are in the trading game, but if you don't, you are out. Especially when learning how to trade consistently, keep your risk low. Even when you're getting a good, keep it low because you will have losing periods, and when you do, you want to absorb them well and not take big chunks out of your account. Trading without emotional is easier said than done. Let's face it. Many of us traders are emotional and reactively, and we are affected on the daily basis by the fear and greed. If you have $10,000 account and you risk $1,000 in each trade, it only takes 10 losing trades to be out of the game. I've been there, I've been there. When you trade big and you're in the losing positions, you get discouraged every time the market moves another point against your position. That's why one of the easiest way to decrease these emotional effects on your trades is to lower our trade size. In this way, even if the trade doesn't go as expected, you get the chance to learn from your mistakes without major consequences. Fifth, being a trader is ultimately an act of the competing against yourself. It's about self-improvement and being better than you were the day before. Being a good trader means being the consistent over the long run. This means being diligent, learning from your mistakes and keeping emotional in check. Stay within your risk tolerance, and if you don't know something, learn about it. The only way to become a better trader is through practice, but practicing isn't enough. It's only the first step in the three-step process of practicing, reviewing, and adapting that will enable you to dramatically improve your trading skills. The self-review process is very important and often neglected by the most of us. This involves looking at all your trades and actions and emotions of the trade of the day and essentially how well you followed your trading plan on each. If you took lots of traders what weren't part of your trading plan, that is the problem. If you looked at the chart for the day and saw traders that you were supposed to take but didn't, this is also a problem. Look for problems are areas of the improvement within you and the strategy itself. 6. If when you lose a trade you learn from your mistakes and it motivates you to work even harder, you are on the right track. It can be hard to maintain your motivation practically when you are had a bad trading period or feel that you are not advanced as quickly as you'd like to when you have a small account, and no matter what you do it seems like it's not worth the effort. It always keep my mistakes and lessons learned in the front of my screen while trading, because we as traders tend to commit the same mistakes every time. Having lists with the mistakes made right in front of your eyes every day reinforce positive habits and ensure that you avoid repeating those mistakes. 7. Trading opportunities are endless. That's always another one comment. Don't get attacked to any signal trades. Do not become emotional involved in one signal trade. Trading must not be about a single trade, although for most of us it can be discouraging when we plan a trade, apply our entries local plan, and then find out that the market does not agree. It is a matter of training yourself to accept that Not every trade can be within trade, and that you must accept small losses gratefully and move to the next trade. And you must allow opportunities to come to you and never chase a market. If you miss an entry, so be it. There's another one just around the corner. 8. Don't focus on the individual fluctuations in your account, winners or losers. What count are your long-term results. You will inevitably have a period with considerable gains and at other times significant losses. Of course, it's easy to become accident and overly aged to make more trades when favorable prices movements benefit your trading account, and this will also be days when your market completely turns against you. A consistent trade understands that neither extreme will last forever, or that during through the good and the bad is the skill that enables you to learn and grow. One trade, winners or losers shouldn't matter, so make sure you don't make any of these trades matter by risking too much money or by feeling depressed to win. Instead, place yourself to win the long distance trade race. The goal is to win long term. You aim for the constantly. 9. A good trade is someone who recognizes that he cannot predict the market. The market is essentially a marketplace for traders and investors, driven by the supply and demand. There are thousands of factors that come into play. We cannot know for certain what will happen tomorrow. When we have several successful trades in a row, we get that feeling that invincible, that we know what the market will go next. We learned to predict the price movements, but too much pride often leads to disaster. Pride can be competitive, emotional thinking we can predict the market can be dangerous. For example, a very common misconception is that support resistance will hold, or that a break of the sellers will cause a substantial breakout, making assumptions that a breakout will occur or that a level will hold off that the future move is an attempt to predict the market. Rather, you should watch what occurs around these levels and then enter a momentum moves in the directions of the other. By doing so, we are not predicting that something will occur. Instead, we enter into the current price flow. This market trading matter of fact as opposite to emotional tense. To get long-term consistently, you must create our own systems by observing what is useful, disastering what isn't, and adding what is uniquely your own. Thinking of the training as the continuing educations, you need to remain focused on the learning each day. It is important to remember that understanding the market is the ongoing process. Having a growth mindset is the key to being successful. When it comes to trading, we often develop our views from the opinions of others. This is fine to start, but as we continue to develop, we must be able to accept that something we once thought was right may actually be wrong. It is important to always have the critical eye, and you must find your own style by implementing what's right for you and discarding the tools or information that don't link with your own style. As always, if you learned something new and found value, leave us a like to show your support, and don't forget to subscribe and hit the bell icon to get notified every time we release a new video. Until next time.